when you have to over collateralize, plus it has to be on chain. So now that means you have to go and buy whatever the token is. Let's just use Ethereum. You have to go buy 150% more Ethereum than you plan to borrow. Most people won't be able to do that from a logistics standpoint and even and a financial standpoint. So Goldfinch and any other private credit protocol that will be introduced that doesn't require over collateralization, they're always going to be game changers. And of course, there are risks associated with it, but we're going to get into all that.
Yeah, and lastly, it's actually riskier for a borrower to borrow via over collateralization because you have to trust that the company or platform that you're borrowing from isn't going to fuck off your collateral, BlockFi, Celsius, etc., etc.
All right, so before we jump into the white paper, I thought it'd be appropriate to give like a slight background on the landscape of private credit. So over the last couple of years, pretty much you can even just go back to the pandemic when the Fed slashed rates to zero. One thing that does is makes private credit way more attractive because most private credit will come with floating rates. And so as the Fed cuts rates, it makes it more attractive for an institution or a counterparty to go directly to that other counterparty because it's cheaper in the long run, essentially. So you get a better bang for your buck. And they started to generate double-digit returns. Since then, you've seen a rapid rise in the private credit market. Last year, there was about $120 billion that were raised through private credit funds just last year. And so some people are even fearing that it's a bubble at this moment. And so one thing that adds to the bullish case on a protocol like Goldfinch is that, hey, we're getting ready to potentially go through another easing cycle now. And so, look, we're at high rates at the moment. And so Goldfinch is technically being suppressed because the cost of capital is way higher. And with floating rates, super dangerous, obviously. So if we're expecting the Fed to cut rates in June, July, you can expect on the latter half of the year that protocols like Goldfinch, other RWAs, or other private credit protocols, they'll start to do really, really well as we go into that easing cycle.